Hi, this is Pete Birchler, StockMarketAlchemy.com. Today is August 21st, Wednesday, after the close here in the U.S. And today I have a market update video for you, and also given the context of the market, I also have a special free trial and discount offer to go over with you that I'll go over at the end of the video. But first off, we're going to look at some charts of the S&P 500, and we're going to look at a few stocks that I've recently sent some emails out to my mailing list, and some stocks that are also recently looking at trades at for the Harmonic Trading stock selection service, and some ones that are still on the radar. So probably a little something in here for everyone. So first off, let's look at a chart of the S&P 500, and this is a weekly chart. And what I had mentioned in the last update for the mailing list that I sent out was we had this multiple time frame bearish divergence pattern on the MACD indicator. And we had a weekly, we had a daily, and we had a 4-hour bearish divergence pattern. That coupled with a weak breakout of the May high and now a close back below the May high. So what we're going to look at here is really kind of where I think we're at in terms of the technical analysis. So first off, this is looking at a weekly chart, and what I want to notice here is the weekly MACD was at its highest level in years in May. So we can go back on this chart and we can see that that was the highest level this has reached in several years. So certainly could classify as an overbought condition in the market. And then we saw this sharp correction into June, but a relatively shallow one, and we saw a move up here into July and August here above this high. However, that created this divergence pattern on the MACD. And for those who may not know, a divergence is when we see price move higher but the indicator make a lower high. So this peak here in the MACD is lower than this peak. This is a very, very classic looking divergence pattern. So imprint this pattern on your brain here. So if we look back at this chart, we tend to see major corrections or trend changes after these type of divergence patterns. So if you look at the top of the bull market high in 2007, we had the market try to break out after this sharp last correction of the bull market, a relatively swift move up to a new high. However, we had this divergence pattern. We saw a similar thing back here in May of 2011. We saw the MACD peak out here, sharp correction, attempt to break out, which was very quickly turned back with a divergence there. When we looked at the bottoming pattern of the recent bear market, we saw a similar thing. We had this breakout that lasted for a week or so here of this October low where we saw the MACD reach its trough, and then we saw the MACD create this divergence pattern. As price went lower, it made a higher high. These are the type of patterns we look for at major trend changes. Now as far as confirmation of a divergence pattern, what we want to do is we want to see the MACD line actually move down below the trough between the two peaks, and in this case we're right about at that level. So 39.59 was the weekly MACD here at this trough, and currently we're at 39.61, so they're almost dead even. So if we see this week close even lower than it is right now, or we see some weakness into next week, we're going to see this make a lower low, so a lower high here and a lower low in the MACD. And given the failed breakout, which is very typical of an exhaustion type of move, with a short last correction, short last leg up, fail breakout, reversal to close back below the old highs, and then we see this divergence pattern. There's just a bunch of stuff here technically that says we could be seeing a relatively large correction to take place here, possibly even a bear market environment to take place. But in any case, we just know from the analysis here that this is set up for the market to correct, and that's all we really need for the purposes of what I'm going to go over with you as far as the services that I offer through my site. Now, if we zoom into a daily chart, we can also see that at this recent August high, as price broke out above this initial July breakout attempt, we saw another divergence on the MACD. So it reached its peak back here at this breakout, and then as price went higher, we saw another divergence pattern. We also talked about that in a 4-hour time frame here. So we have the again, the MACD peaking out back here in July, and then we saw the lower high here into August. So we really have some multiple time frames here that suggest that we could not only be seeing a move down on a daily time frame, but a weekly time frame that could be lasting for a considerable amount of time. Now, as far as the pattern in the market here, what we want to watch for is see what the price action does here off of this high relative to this move up since June. So these two vertical lines here, this represents the time from this June low to this August high. And so this line here, labeled 2, would represent an equal time forward as this move up took. If we see the market move down below the June low, so let's say to 1560 by September 11th, then that would be a pretty solid indication that we are in the midst of a larger correction or possibly a bear market in stocks here. So this is something we want to continue to watch. Now, as far as what to expect here in some different scenarios, these are some projection lines on the charts here. And these black lines represent the corrections of this last move up since October 2011. So this correction here, 10%, this correction here, 11%, this correction here, 9%. That's what these three black lines here, here, and here represent. So even if we just see a relatively normal correction, that's what we would expect. And we can see the market is well shy of that, not even halfway to those, those levels of correction yet. And then if we see a correction on the order of we'll zoom out to a weekly chart here. If we see a correction on the order of this 2010 decline and 2011 decline, which we saw after past divergence patterns, then that would look like these corrections here, even if it's a continuing bull market. Now, just for a statistical reference, a normal or median correction historically in the S&P 500, so in a bull market, a correction in a bull market is roughly 10% in around a month and 2/3, so roughly around 7 weeks to 8 weeks or so. So that would put the S&P down around the 1540 level. We're currently at 1640, so that's another 100 points, another 6% or so to fall from here. So just understand that even if we're just looking at a normal bull market correction here, stocks have some downside in them here, potentially based off of this pattern. Now, because of that, and because we're still in relative proximity to the highs in what could be a significant correction, what we're really looking to do here, as far as the services I offer, really looking to find great short selling candidates in the market. There are some complex currents in the market right now where I think commodities are oversold, and we may start to see some inverse action between stocks and commodities. And I'm going to show you a couple stocks with some bullish formations, in addition to a few stocks showing some bearish formations of the type of chart patterns we look for in the service. Now, just as a reference to understand the sentiment environment of the market, this red circle here indicates a very low put-call ratio that occurred in July, and that is a sign of complacency. We had gone a full 10 months without a reading like this of outside this Bollinger Band here, below this blue line. It wasn't since last September we saw that type of reading. So we just got that reading, then we saw an even lower low in the put-call ratio, and if you look at it on a historical basis over the last few years, that's a very low average reading that we've seen near some prior market peaks. So this is just something to understand from the sentiment that we have recently seen some extreme complacency, and if you look at some of the peaks in the pink line here, even in the recent corrections of the leg up since November 2012, we see that pink line all the way up here on the total put-to-call ratio. So this, we could certainly see some more fear enter the market, even just given a continuing up leg or normal uptrend in the markets. And if we see a sharp correction like we did in 2011, 2012, we could see some substantially higher put-call ratios, which would correspond with significant sell-offs in the market. So that's something we want to be aware of here. Now, the equity put-to-call ratio, one of the reasons I believe this market still has some significant downside left in it is, despite being 2.5 weeks or so, roughly 2 weeks down in the market here, the highest we've seen the equity put-to-call ratio spike is around 0.65 here over the last couple weeks. Very, very often at a corrective low, we're seeing it spike into the 0.8, 0.9 region, and even on some of these minor troughs in a leg up, we see it into the 0.75 region or so. So just based off of these sentiment measures, we certainly have some ability for this market to display some more fear in here before we see price bottom. And even if we see a temporary multi-day rally, I think that's going to fail and give way to lower lows in this market. Additionally, as a measure of sentiment here, we can look at the VIX, and a VIX is a measure of implied volatility in options. So it's really a way to gauge what the how the option market is pricing in risk or volatility into the market. And this Bollinger Band configuration here is based off of a 63-day or 1/4 Bollinger Band setup, but we can see that that's really where the VIX has moved to on a lot of these sharp corrections, even within the uptrend over the last several months here. So given that, we still have some room for this VIX to rise up to the 18 or 19 level, even if it's just a normal kind of a blip in an uptrend. So some indications here based off of volatility and off of the put-to-call ratio that this market probably has some more room to the downside. So given that context, the reason I am going over some special offers today is these opportunities don't come all the time. So you just need to go back and look at the chart and understand this here. Let's go back to a weekly chart of the S&P 500. When you see a market reaching a peak like we did here at this divergence in May 2011 or back here, April 2010, we then saw the market make some significant corrections, and the first stocks to break down in an environment like this, the first ones to give you a short selling pattern are typically going to be your biggest winners, just like the first stocks to break out of basing formations in a bull market are going to be your big winners in a bull market. So there is an opportunity right now that I believe the really ideal window to get in a service like mine is really going to be here this week and maybe the next week or two. Once we start moving into a month or so out, a lot of these opportunities are going to not be as good. You're going to see price moving away from the low risk points, and you're going to get stuck in a trending environment. And have to be looking to get in the middle of a trend rather early in a trend with a small risk and a substantial reward. So given that, I want to have an ability for those of you who want to do some trading. Maybe you're unfamiliar with short selling, or maybe you are. Maybe you want to short sell. Maybe you want to look at playing some put options on stocks, but in any case, this is the time here. And if you don't take it now, I think that certainly in the future there are going to be opportunities, but they may only come opportunities like this once a year, maybe twice a year, where you're seeing these type of major divergence patterns. So that's why I think this is such an important juncture in the market. All right. So to look at a few charts here, first let's look at symbol CAVM. This is a stock I sent out to the email list here about a week or so ago, and noted that here we have this upward corrective pattern. We have a non-confirmation with the general market. We have a divergence pattern in the momentum, and then we see this gap down on the recent earnings announcement, breaking the trend line of this last move up here. Now we've seen it come back up and consolidate into this gap level. This stock continues to be a good opportunity to potentially short here, either with a stop above this level or wait for price to break down below this level at 34.10 and then short with a stop above here. In all cases, the minimum limit order we're looking to exit the trade with is a move back below what is labeled point X on these charts, so all the way down around 28.50 on this chart here. So you have a significant potential 3 or 4 to 1 risk to reward type of scenario here. Even higher if you're looking at shorting at the current level with a stop above here. So that's one to continue to look for. Another chart I sent out recently was a symbol MCRS, and so micro system. And what I noted here was here we have this corrective pattern, and this red box here, this is where we would expect this move up to top, given historically normal or typical price patterns in these harmonic patterns that I've studied in great detail. And here we are right in the midst of that time frame. We have earnings coming up tomorrow after the market close. We have a divergence pattern right in the midst of this expected reversal zone. We have a tight harmonic reversal zone here around $50.50 or $50.40. What we would be looking for here is for earnings to lead to a gap down, and we would want to see price move back and close below this point A here, so this $48 level. If we see that, we see momentum turn down below the neutral line, then we're going to have ourselves a reasonable looking short sell opportunity on this pattern here for a move back down below the 39.50 level. In larger context, this stock may be displaying, if we move out to a weekly chart here, this may be displaying a head and shoulders topping pattern. So if we do see the general market turn down, especially if this does happen to turn into a bear market off of this high, then we could certainly see this stock make a significant move down here if it fulfills this head and shoulders projection, which if we just do a rough projection on that, would put this stock down around the $27 level here. Taking the typical projection. So that's another stock to watch. See how earnings comes out tomorrow on it. Wouldn't necessarily recommend shorting just before earnings. That's going to give you some risk there that's just unnecessary. It's preferable to wait for the earnings. If it comes out, breaks down, makes a gap lower, closes below there, then you could be looking to short. Also, a lot of times the implied volatility on options is going to be high right before earnings, and so it's not always a great idea to make option purchases right before earnings, especially if you're only looking at a couple months of time as far as the option goes. So those are a couple of charts to look at here. Now, a couple charts that I've recently emailed subscribers about that we are either currently in or have orders to enter. This is symbol PLCE, Children's Place. Here we have our harmonic pattern, we have our expected reversal zone, we have our divergence pattern on the momentum, price higher highs, momentum lower highs. We have a breakdown in price here. Earnings comes out tomorrow, so the 22nd before the open. In a typical pattern here, this would be set to gap down in this scenario here on a typical successful pattern. In this case, we would be looking at the stock to gap down and move back below this low here around the $42 level at a minimum. Another stock to look at, this is symbol TXT. If we zoom out, this is a daily chart here. We've seen a move down off the March high. We obviously see that it is not confirming new highs in this stock market, whereas the S&P 500 is well above its March high. Here we have this stock unable to push to new highs, and even as prices in the general markets pushed into higher highs in August, we can see that this stock did not push to higher highs. So there's multiple levels of non-confirmation here. This stock has just begun to break down. We're already beyond earnings, which happened here at the end of or middle of July. If we can continue to see this stock fall below this $27 level, we would probably be looking at a relatively rapid move down to the April lows here at 25, and certainly some further risk down below there into the $22 level, just given this chart pattern. So that's another shorting opportunity to look at here. These are just a few of many solid opportunities right now in the market. Some of these symbols I have up here, if you're a technical analyst, you can go through and look at some of those symbols on your own charts. Some bullish, some bearish here. But these are the type of patterns we look for. Now the key is we're not just looking at a pattern and saying, okay, this looks nice, let's just short it. No, we need to have specific rules about when to short. We need to have specific rules on where to place stops, and we need to have specific rules and strategies on how to move the stops so that we can allow the market to move in our favor and we continue to capture profits. And also we can look to have profit-taking opportunities that are objective, not subjective. And those objective opportunities are always defined internal to the pattern itself. In this case, what I would have labeled as point X would be an initial profit-taking opportunity. Typically what we want to do is exit a part of the trade on a profit target, and then use a trailing type of methodology to allow the very large winners to continue to move in your favor. So if you look below this video and look at some of the options that I'm going to go over here towards the end of the video, you'll get some more information on exactly how we go about doing that. But that's the general idea of what we do for those of you who are unfamiliar with the services of StockMarketAlchemy.com. Now, I am going to show you two bullish patterns here that I think are rather interesting. The first is symbol FSLR, First Solar. So this is really the dominant solar company in the world, probably. And this is a daily chart, and we can see that we have this nice move up here in the spring, and currently we may be tracing out a ABC pattern here. One of the things I teach in my free online courses is a concept of price logic, meaning if we see an explosive move in one direction followed by a more time-consuming and smaller move in the other direction, we're likely looking at the trend continuing in the direction of the explosive move and looking at this being a correction. If this conforms to normal harmonic pattern standards, this would be the reversal zone we're looking for. So if you're a chartist, you can put this 36 to 28, 29 range on your chart, and if you see the correct type of technical signals, I would say that this could be a slam dunk type of a pattern here on First Solar. If you look at the long-term chart pattern, you can see the stock fell from $300 in 2008 all the way down to $12 here in 2012. There's somewhat of an awkward but potentially legitimate head and shoulders bottom pattern here with a shoulder, a head, and a shoulder. A big volume breakout of the neckline and a retest of the neckline, which is also a very, very classic type of chart pattern just from standard chart analysis. So that fits in with the harmonic setup here. So that's a bullish pattern to look at here. One interesting thing about this stock is that given the bear market in commodities over the last 2 years, a number of energy-related companies and commodity-related companies, oil companies, solar stocks and things, they've really been beat down, and their valuation levels are relatively low. So from a valuation standpoint, these would be stocks and sectors to look for, in my opinion, possibly for some potential bullish candidates. It doesn't look like this stock is ready quite yet, but wants to keep on the radar here. Now, another interesting stock here, one that I've followed for a number of years, this is Blackberry, formerly Research in Motion, so symbol BBRY. We can see this dramatic move up here, which is much larger than any of these other smaller moves in this downtrend over the last few years. That's typical of a bottoming pattern in a stock. Then we see this more time-consuming correction here relative to the uptrend. The stock is right in the midst of where we would expect it to reverse, given normal harmonic patterns here. What we are looking for here is one of two scenarios: either a break above this high here around $12.15, or for a move to slightly undercut this July low to create more of a strong divergence pattern, and then be looking for a buy formation coming up off of that. Now, interestingly, on this stock here, some of this big run-up in the stock here from $9 up to $12, a 33% move in a few days on the stock, was a rumor on a buyout or this company putting itself for sale. Now, that hasn't happened yet. It's just a rumor, but I have traded patterns like this before. Where I had no idea there was a rumor, where no idea there was any type of buyout, talks in the process, and then when the company got bought out, there was very large gap ups in the stock, which they're typically going to. The buyers will pay a premium to the current share price, and sometimes that can be dramatic. It can be some substantial price moves. So this is an intriguing pattern to me in that. It's setting up for a consolidation or bottoming pattern here. It would be interesting to see if this stock does get bought out and push the stock up with a big gap substantially higher on the buyout. So maybe one to look for to be long as it holds above this $6 level, possibly even just using, if wanting to look at the stock currently, for it holding above this 850 level. Playing it either through the stock or some type of long call option with a reasonable amount of time till expiration on the option. So just some ideas there, looking at some bullish patterns here. We always want to be looking at bullish and bearish patterns, but understand the sentiment of the market to understand which direction we're going to have our high probability trades. So hopefully this information so far has been useful to you in order to understand the context of the market, but also to give you some ideas for trading, give you a little background on how these patterns work, and help you get a feel for the type of analysis we do. Obviously, this is very quick analysis here. In the mentoring course I teach, we get into great detail, and in the trading service, we have very specific rules and patterns we look for as far as entering and exiting these stocks here. So with that being said, I have an offer that I want to go over that I have not done before, and the reason I'm doing this is I think this is such a critical juncture in the market here that if you have any interest in this service here, now is the time to take it, because I think we're going to move out of the really great opportunities here over the next few weeks or month or so. And I always try and put myself in the shoes of somebody who's looking to subscribe, and what would you want if you're subscribing to a service? Well, I would want to be able to subscribe and then get some recommendations right off the bat and have good opportunities right off of the bat. Well, the fact is, let's go look at a chart of the S&P 500 here. Let's go to a daily chart. And let's just look at this uptrend over the last, the last year or so. Let's say we saw the market correct here into November 2012 in a bull market. There are going to be a number of good buying opportunities. But if you don't get in on those opportunities while the market is down in these levels here, with your stop point being below that support, and you wait for the market for a month or two, and then you're already up here, well now, instead of having maybe a 2 or 3 or 4 or 5 to 1 risk to reward type of scenario, you're now looking at more like a 1 to 1 scenario. The fact is, a leg up in a bull market in stocks lasts almost 5 months. So if you don't get in towards the beginning, you're going to see that market continue to move without any major changes in direction that give you these great opportunities for months in a row. As far as bear markets go, if we are changing currents in the market here, legs down can last 3 and 4 and 5 months in a bear market. So it would be conceivable to see this stock market decline down into the fall or winter here prior to putting in a rally. So this, in my opinion, is the opportunity here, and because of that, I want to do something kind of special and give you guys an opportunity to take advantage of this service with some options that I haven't given before. And the first service I'll go over with you is my trading recommendation service, the Harmonic Trading Stock Selection Service. And what we're looking to do in this service is really to help you profit from objective pattern identification. So this is not just willy-nilly pattern identification like much Elliott wave is. Not that Elliott wave is a bad thing. I think it's a great thing, but we're really looking at rules here, and we're looking at historical patterns, and we have this all quantified and understand exactly what we're looking for, and then we have a systematic indicator-based method to enter trades, to move stops, and to exit trades. So as far as the service details, what you get are specific trade orders to enter, specific stop placement initially, and then stop movement as the price action unfolds. And one of the values of the service is we aren't just looking at a price pattern, we're looking at price and time patterns. And time is the big thing that can be missed in a lot of pattern analysis, especially if you're looking to trade options, because options are a wasting asset. They're going to have time decay. So if you're looking to make the home run option trades, looking to make 2, 3, 4, 500% on option trades, that can be done. I've done those things literally many times, but if you don't know how much time to buy, if you don't know how far and how fast that market is likely to move, or how far this stock is likely to move given typical relationships, a lot of times your timing is off and you end up just losing your money trading options. So if you have no experience with options, certainly best to start with stocks, but if that is an area you have experience, the projections that I give in this service can be extremely useful for options trading. All right. Now currently, given the current market context, what I'm going to do is give you guys basically an opportunity to try this service out for free. So I'm going to give you a free trial period. And what I'm going to do is, if you sign up for the annual subscription, so a full year subscription, which is a $300 subscription for a full year of the service, you're going to get a 2-week free trial at the beginning of that. So you're not going to be billed initially. You'll get a 2-week free trial. If you want to continue, then just do nothing. It'll kick in after 2 weeks, and you'll be charged after 2 weeks. If you think that that's not for you, you don't want to continue, just send an email within that 2 weeks saying you want to cancel. We'll cancel the service, and nothing will be continued. So that's going to give you a way to try out the service and see if that's something that's going to fit your trading style. Now, I'm also offering a free 1-week trial on the semi-annual subscription. So that is a 6-month subscription. That is $180. So the annual subscription is a better value if you're just looking at it on a dollar basis. This is going to have a 1-week free trial. The annual subscription will have a 2-week free trial. So both of those are options for you if you're really just looking for trading recommendations, wondering how this form of analysis will fit what you do, whether you're brand new or whether you already have some methods and you want to see how this fits in with your own methods, whether that be stock trading or option trading. There are more details below on the service. You can click on the more info buttons to get subscription and information, refund information, those type of things. So I would encourage you to look at those further. Now, I'm also doing something that I have never done before with the Integrative Harmonic Trading course. So this is a course I've designed to teach you in really, really great detail the concepts that this trading methodology is based on. And it's something I developed through years and years of study, thousands of hours of observation, hundreds and hundreds of hours of quantification and analysis and cataloging of chart patterns. So really, this is helping you become an expert in this form of trading. And it's a great way to trade. It's a very, very fun way to trade. When you start seeing, when you know what to look for before it happens, then you see it happen, you know exactly what to expect, you see it happen. It's really just an amazing way to trade. Now, you're not always going to be right every time, but there are times where it will seem like you've laid out an area where the stock should reverse, you've laid out a price area where it should reverse, a time area, and it's just exactly on track, and then you see the market explode off that point. These just provide fantastic opportunities. It's a very fun way to trade and a very profitable way to trade. I'm not going to go through in a ton of detail here the course, but the course is 12 lessons of video-based training, so it's pre-recorded. training lessons. The course outline will take you, you can slow this video down and look at this if you'd like to, as far as what it covers. There's a phenomenal amount of detail in here in this course. I promise you there's great information in there. Now, as far as to make the course more valuable, when we have pre-recorded training, really what you need to get better is to have live market experience. And so what I do is I provide you with a year of unlimited email access to me. So anytime you have a question regarding stocks you're looking at, regarding the lessons you've went over in the course material, regarding current market conditions and those type of things, you email me and I'll respond to you as soon as possible. We'll evaluate the stocks you're looking at and those type of things. And that way you are getting current market information, and that's really what's going to help you learn. All right, you're going to be able to get all your questions answered. You're going to get the questions regarding the stocks you're looking at analyzed if you need help doing that. You'll really learn to master the information. And understand that as you go through the course, at the beginning there's going to be some new concepts. After you've been doing it 6 months, 9 months, 10 months, 11 months, you're going to have a much deeper understanding and more observation of this, and it'll be very nice for you to be able to come back and now ask questions at a more advanced level than you could at the beginning. So that full year of unlimited email access is really, really important to your growth as a trader and to really mastering this method of trading. Now, two standard bonuses I offer with this course is also a full year access from your date of purchase to a frequently updated student training blog. So every week or so I'll update this with what I consider to be good opportunities, either for trading, I'll give you opportunities for analysis, things for you to stay sharp on, and things to give you really good trading ideas on. That also, if students have questions and I'm seeing certain questions repetitively, or a certain chart pattern that I think is interesting, or maybe a high profile stock like Apple or something like that that many people follow, I'll make a post or a video on that so you can see what other people are asking about, and everybody can benefit from that information. You'll also get important market timing updates based off of the sentiment and price structure of the market and the technical analysis of the market. So even if you're not an expert technical analysis, a lot of directional trading in stocks depends on solid market analysis. So you'll have me help you get your market timing right as you're studying these patterns. I will frequently give you a list of stocks that you can keep in a watch list, so you can kind of you don't have to constantly be searching and sorting for stocks yourself, though that is something I teach you how to do. But it's something where I want to give you a number of good things to watch, and then let you in advance kind of sit and watch and wait for them to develop, so you're already comfortable with them, you know what you're looking for, and then you can see if what you're looking for happens, and that'll give you confidence to really act on the trades when you approach it that way. Now, the second bonus I offer is a additional video training called The Mindset of the Successful Trader, and this is something that I produced to really give you a framework for trading analysis, for entry and for trade management, and also go over in some detail the attitude and psychology that it really takes to make money in the markets, because success is really between your ears. Many people could easily devise a system that is profitable for trading. It's not hard. It's really the persistence and the character of the trader that's going to help an individual investor who's making their own decisions to be successful in the market. So this is just vital information to help you be successful. The price for the course, for all those things we just listed, the training videos, which you have access to for a full year, you have a year of unlimited email access, you have the year of the blog and updates, and you have the bonus training video. The price is $597 for the course, and that is what I typically offer the course at. But I wanted to do something to really help you at this current market juncture get some experience with kind of the result of this. How does the methodology work? Let you see it in action. So what I'm doing is I'm offering you a 1-month free trial to the Harmonic Trading stock selection service that will be included with your purchase of the course training here. So Here's the way this works is if you sign up, if you purchase the course training, I think this will be really an ideal time to go through the course because we're at a potentially critical market turning point. That's when you're going to have the most interesting and kind of dynamic time to go about learning this information. So I really don't know if there's going to be realistically a better time in the near future to actually take the course and go through the information. The service itself, if you want to continue the service, just do nothing, and the service will be automatically renewed and billed at $30 a month. So that's going to give you effectively the same rate as a semi-annual subscription, which is $180 for 6 months. So you're still getting a discounted rate on this here. If you don't want to continue the service, send an email, cancel, and we'll cancel the service. Again, look on the page below for more details. One thing that I do that almost nobody in the trading industry will do is I give you a full 13 weeks from your date of purchase of the Integrative Harmonic Trading course. I give you an unconditional money-back guarantee. So that basically means if you don't like it, if you're not satisfied in any way, if you buy it and do nothing with it, if you want to buy it and learn everything I teach you and then still ask for a refund, hey, I guess you can do that. This is just my way of saying to you that I know this information is valuable to you. If you're not happy with this information, within the first 13 weeks from your purchase, let me know. We'll refund 100% of your money. Right, and so that way you'll have time to, by giving you a full 13 weeks, you're really going to have time to go through one lesson a week. So there's 12 lessons. You're going to have basically 3 months to plod through those lessons, to get some experience with the market, to read see some updates on the training blog, go back through old blog updates and things, and go through the bonuses I offer. And that way you can go through all of that information, and then even if you've done it all, you can still ask for a refund if you don't think it's for you. So if you look at the products below, there's a list of subscription options, and there is also the Integrative Harmonic Trading course with the included free trial to the Harmonic Trading Stock Selection Service. So that's what I have for you. Now, this opportunity is only going to stay open through midnight on Eastern Standard Time here in the U.S. On August the 26th, so on Monday night. And the reason for that is I really believe, based off of some of this information I've covered and I've gone through on my my blog, that now is the time. This is a market that could fall substantially here, but we also have the commodity market, which could rise substantially, looking at a potential cyclical bottom in commodities here in the fall. So this is a time where I think we're going to see some big moves, and maybe some diverse moves in various industries and stocks and things. So I think it's going to be a great time. So if this is something you've thought about doing in the past, I think now's the time to do it. If this is something that you're really just interested in getting some trades, where you're going to get an opportunity to look at some of the trades that are currently active for free. Now, I wouldn't necessarily recommend going in and taking those trades if you don't understand how to follow up, how to move the stops, and that type of thing. So I think your goal should really be to get in, get a feel for it, and then if it's something you think will work for you, commit to at least a 6-month time frame to do that, and give yourself a chance to get some good trades, to have them work out in your favor, to lock in some profits and really see it from start to finish, rather than just jumping in but then not having the support to help you manage the trade, because that's really where success is. Anybody can go in and buy a stock. It's not even that hard to find a good time to buy or a good time to short. What is more difficult for traders is to manage the trade, given the possibility of loss and given the possibility of enormous gains. Those are both difficult situations, and ones that we often don't handle well. This course and the trading methodology is designed to help you handle those situations well. So that is all for this update. I hope you enjoyed the information in this video, and I really look forward to seeing new subscribers and new students in particular for this course here. I just really think it's going to be a fantastic and a fun time in the markets if you're on the right side of the market here. So that is all for this update. Have a great day and all the best to your trading.